Good morning, everyone. This is Daily Trading Analysis with the weekly recap. As every Saturday and every week, we are going to review the fundamentals of the week day by day and also perform technical analysis in which you are going to gather why and which levels were broken this week. And let me tell you, this week's been really interesting. And finally, in 2 days, in the Nasdaq, we've grown more than 3% in 2 days, and the SPY has reached all-time highs that were not there since January 2022. So let me tell you why in terms of fundamental and why in terms of technical analysis this happened, and how could you even catch some of these moves, because these moves always have a background, both fundamentally and both technical. So let me show you, starting from the fundamentals, how the week were. So we started on Tuesday. Remember, Monday was Martin Luther King bank holiday. So we started Tuesday with New York Empire State coming way down on the manufacturing index, minus 47, minus 43, sorry. We were expecting minus 5 on the consensus. And then throughout all the week, a lot of Feds, Waller, Fed, Bar, Bowman, Goods, Williams, Bostic. So a lot of Feds this week were saying, be careful, adjust your expectations, because we need more data to really adjust the rate cut path. We can see three rate cuts this year, 75 basis points. The market is not pricing it that. And we were kind of in Tuesday, we were kind of chopping and consolidating, waiting for that data that the Fed was basically waiting for. A part of that was on Wednesday when we got retail sales, and look at this, 0.6% instead of the 0.4. We were expecting an uptick, but as always, consumer and retail is super strong. And here's why we have a little bit of divergence. Is good news for the economy good news for the market, or do we still need bad news for the economy to really see good news and bullish price action in the market? That's the divergence. And on Wednesday, we went down. But on the technical side, we recovered with basically a little bit of a tail on Wednesday. We are going to see that on the charts. But let me go with my narrative. Wednesday was a break point. Buyers stepped in. You can see and you can review my analysis on that day on Wednesday. On Thursday and Friday were the big days. Bostic started saying the same thing, so markets were saying, okay, let's see more data. Building permits, housing starts, initial jobless claims. What was the number? Permits, 1.9%. 1.9%. So people are really, the sector is really looking for new houses. But they are cooling down, minus 4% on the housing starts. And look at these jobless claims. We were waiting, as always, to see cool down on the labor market, 207,000, but we got 187. But the market pushed up. And on Friday, more of the same. Michigan consumer sentiment. We were expecting 70, a little bit of an uptick on the consumer side. We got 78. 78. Market spiked up. Thursday and Friday are your days. Those days really told you why the market wants good news is good news for the market. So we want strong economy. We are not talking about inflation only. We're talking about recession, because at some point the Fed is going to cut rates, and that will probably happen when they see that something has broken in the economy. But then the market will start seeing those is starting to see some concerns about the economy if we go to recession. So that's why we need to see strong data to support the economy when the Fed cut rates. And if we check the rate path going forward, it changed a little bit. On March, we are not pricing in anymore an interest rate cut. So we are starting to see cuts on May. And also at the end of the year, there's no more rate cut on December. So we are grouping these two groups. So one less cut here and one less cut here. It's basically the way in the middle, 4 rate cuts. This is adjusted from the Fed because the Fed was saying 3 rate cuts, 3 to 4. So this is your market adjusting the path. And if the market adjusting expectations is moving higher and also breaking all-time highs into the SPY, then you know that this market most probably is going to continue higher. Let me show you this on the charts. Let me first start with the SPY. This is the cash ETF. As you probably know, this was the all-time highs in 2022, and then every day disaster happened. And since then, on the ETF, we were most probably, as on the equities, we were trying to push higher. Look at this since November. All these gaps that were left behind, not even touched, not even a pullback. We wanted all-time highs, and that's what we did. The Friday, we got 1.25%. On the ES, on the equities market, we touch that point of April 2022. We are not quite near, but not even near of this 2022 high at 5,000. But a lot of analysts are waiting for this, are saying SPY is going, sorry, ES is going to see 5,000. And we are at 4,800. One of the technical details was that Friday was options expirations. 4.5 million items expired on Friday with a max pain of 460. And we were at 480. We were invalidating, we were not following those options expirations strikes. So, and the market kept pushing up and higher and higher. And when the market does this, it really is going all in. It's not going, in my opinion, it's not going to stop here at all-time highs. It's not going to reject. Look at this candle. This candle is huge. It's closing at the highs. It's breaking through. It's not pulling back. So going into small time frames, let's see the price action on Friday. Look at this. Look at this price action into the all-time highs. So let's start reviewing the Nasdaq with that point of view. How the market reacted this week. This week, 2.77%. Remember this? When I told you, oh, in 1 week, we just reverted this with a V-shaped reversal. We held the weekly imbalance, we touched it, and we broke. On the daily, this was really crucial. Taking this liquidity, not even touching this fair value gap on the daily, and look at these candles. This is the candle I was talking about on Thursday. When we were in balance, we tried to go lower, buyers stepped in, and we put this candle on Thursday so near to this liquidity and so near to all-time highs. You know that the market is going to explode. So let's go to the 30-minute to really see how I manage my bias on Friday. So this was, I took 2 trades, 1 long and 1 short. Excuse me. So this was the balance, the inefficiencies that I was watching, not even near. Look at this. It was just out of my mind. When in pre-market, we were so bullish. So bullish. So your problem when we are so bullish in pre-market is, how can I enter into this trend without taking more risk than needed. And you have to really wait for displacement. And usually big displacements happen into London Open. London Open, remember, is at 3 a.m. New York time, and it's 9 a.m. Europe time, UK time. So look at this move at 2 a.m., 1 hour before the open. Look at this displacement. We were building this liquidity up here, and at 2 a.m., we got this big displacement. We took that liquidity and we pull back. So this is your first time. This was my trade, my first trade. Okay, let me take this inefficiency to see if we were super bullish, but let's see if we hold the liquidity. I took it here after the bounce, first candle on the liquidity on the 1 minute fair value gap right in here with the stop right below the inefficiency. This is just 7 points risk with one contract, just to test waters. Target the next, let me open the 30-minute, the next liquidity. The next liquidity was coming from the NQ. Look at this, this is both liquidities. These two liquidities were from the NQ. So the first liquidity was, sorry about moving so much, was this one. And this was in pre-market. So we were so bullish that we were taking 17,200 maybe in pre-market. And we did. This is the 17,198 was the 200, sorry. And we pushed and we left again a 5-minute fair value gap. And we continue pushing and pushing and leaving gaps behind. Do you remember when this happens? How the market explodes? So this way you can really recognize that the market is willing to go and go and go and go. And this is pre-market. So at some point, we need to see a stop. We need to see buyers willing to take some profits, sellers started pressuring, and the algo will start moving price down to really balance all these moves. And that's why I took this short. This was the first displacement, big displacement. It was not super big, but it left behind a fair value gap in here, as you know. And look at this. This is not selling pressure. This is just the algo not willing to offer higher pricing anymore. So you can just take a little bit of a breakdown. See, this will be the market structure change, and we have all these lows that, and most probably this, that was my target. So this was all liquidity. So I just took a shot. 7 points risk, not for this, because basically you can just put stop here. You don't need this. If we touch this, we are going to destroy these shorts. So you can minimize your stop here and take this fair value gap inefficiency. You are seeing confirmation. So basically, you take the way down and you start, most probably all this liquidity is going to be hunted. And maybe around here, I started seeing, okay, maybe I'm going to trail the stop because this is going to explode higher. I was trailing my stop, I think it was here to take some profit for a 1-to-1. And then this happened. So I took this short and it reached my target, 31 points, 31 points plus 26. That's, I think, 60 points something, 1,200, 1,200. I don't need anything else. I don't need more. I know the market is bullish. I know we are correcting. But at some point, we are going to see choppiness. That's why we see this choppiness on Friday. But look at these lows. Market doesn't want to go lower. And on the 30-minute chart, and even on the 15-minute chart, we are holding these imbalances. Look at this. We are holding all these people. We most probably need patience. And when high of day happened, oh boy, 1, 2, 3, 4, 5, 6, 7, 8 green candles in a row on the Nasdaq. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. These are 15-minute candles. So on the 1 minute was higher, 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 higher. The algo got it really pretty clear. So I'm going to all-time highs. And that's all. It's not easy, but sometimes you really can see the market going to a point directly. You can see why the market is moving. You can see how the price action shows you strength, how the algo corrects, and then it offers after the open what everyone wants. The big people wanted. The big people wanted all-time highs, and that's what they got. Let's now review quickly the individual tech stocks because, oh boy, look at Apple. Apple really carried this market. This week was unbelievable. Look at this week. This week was 3%. 3% in 1 week. So Apple destroying all these. It's not closing the gap. It's closing the gap, but it's not closing above the gap. It's leaving gaps also down here, respecting this daily fair value gap and just skyrocketing. Also fundamental news for Apple. Microsoft flying through AI. Let me adjust the all-time highs. So tech is really squishing. It's really pushing. Apart from the economic data that we got, the tech stocks are really flying. Tesla, it's in its own world. Google, really flying also with AI. Amazon, retail sales strong. Amazon is strong. Nvidia is just insane. Nvidia is going to push this market to who knows where. And Meta also pushing. So you can see that everyone was pushing, was doing its job to really push the Nasdaq, to push the S&Ps. Look at the banks. KRE, the regional bank sector ETF, 2.53%. Wells Fargo, 3.62. JP Morgan, 1.73. Bank of America, 1.54. These are huge market gaps. And what was the final nail? Crude oil is not doing good. So minus 1% almost. The crude. UK also pushing a nice day. Dollar in the red. Yields being adjusted. So everything is screaming higher and higher and higher. And let me go to the continuous chart to really see, to really try to explain you why I think it's going higher. We got this daily candle finishing and closing strong at the highs. We got the ES the same way, closing higher. And we have these liquidities here that I'm going to just adjust with you. It's just quite easy to project, but let's see how we can really reach this liquidity. So this liquidity on the equities, it's the actual all-time highs. On the ETF cash market, on the SPY, we already reached these levels. So on the ES, we broke this pivot. This is the year all-time highs, the year-to-date highs, and we closed higher than this blue line that was the previous pivot in here. So the next really clear stop is this one. Now, wait a minute, because there is fair value gap in here. So this is the only thing that I'm going to watch this week. The only thing, if we break this and we start to go through this fair value gap, and there's a liquidity just in the middle, if we try to go here and we continue higher, taking this liquidity and higher, you know that 5,000 is going to happen. That's the only thing that I can show you on the ES. On the Nasdaq, continuous chart, remember, back adjusted. On the Nasdaq, we don't have that. We don't have any inefficiency here. We don't have anything. We just have this top, and this top, and they are pretty near. So if you want to really see ES pushing higher, you need the tech sector to push. And it's going to happen pretty, in my opinion, it's going to happen pretty quick. Because look at where we closed on Friday. The liquidity was at 17,493 and we closed 16 points below. There's also liquidity at almost 600 in here and at 17,700. That's a round number. So most probably we can start seeing perhaps a little bit of push, taking this liquidity, taking out, and then supporting this level, creating an inefficiency, an imbalance, a fair value gap on the daily, and then push higher. This is what I'm expecting this week to happen. And in order for the technicals to really develop, and on the ES, remember that be careful with this fair value gap. In order this to happen on the technical side, we really need to pay attention also to the upcoming week fundamentals. And we have GDP growth. Well, first, on Wednesday, we have the PMI. This is a flash, so this is an estimate, a preliminary number. And remember, good news is good news. So we want this to go higher. Trust me, we want this to go higher. If this PMI comes aligned with expectations, and on Thursday the GDP growth starts to align also, we want to see a decrease on the GDP. We want the growth to go a little bit down. And then also initial jobless claims. We want the only thing that Fed is not seeing is a weak labor market. If we start seeing again more jobless claims, oh boy. And then finally, Friday is your day. PCE, the final number. The market will most probably push these critical levels and stop right there into Friday. And if Friday comes with the PCE showing lower personal spending, lower income, lower prices, we are going to break and reach most probably all-time highs on the Nasdaq, and the ES will explode. So as you can see, I'm trying to build a progression to the technical side, and also I need my fundamentals to support this move. So the upcoming week will start most probably with continuation, waiting for Wednesday, because we don't have any big news. Let me just change this. We don't have any big news coming into Monday and Tuesday. We will wait for Wednesday for the PMI. And until Wednesday, the market can pretty 100% can continue higher. You can take advantage of that, but you have to wait for Thursday and most probably Friday to really see that 17,700 on the Nasdaq with all-time highs that everyone is watching. So look for this. We want income to go lower. We want spending to go higher, and we want prices to not do a big spike. We know that in December, this is December PCE, we know that in December the inflation tick a little bit higher. So we are waiting for that to show in here, for example, with a flat number year over year, with a little spike on the month over month, but we don't want to really see a PCE out of the roof. If we get that, prepare for all-time highs. That's all I'm saying. So that's all from my side. I think we have a pretty clear plan for this week. You know that we've been accumulating here and we are now breaking out on the ES. There's a fair value gap and liquidity up here at 5,000. 5,000 is your number on the ES, and on the Nasdaq is not accumulation, it's just big push, pullback, consolidation, good numbers, buyers stepping in, and we just broke liquidity. And the next liquidity is 17,500, and then on the continuous chart you just have these two and it's all-time highs. We are so near that I think market will just push even harder this week. So be prepared because there will be a lot of opportunities for longs. Look for longs. If you don't see a clear long, wait. Be patient because shorts are being squeezed right now. You cannot stop this train with just let me pick the top. Don't pick tops, please. Trust me. This market is not willing to be shorted until it reaches the point that it wants, and that most probably is all-time highs. On the equities, we just hit all-time highs on the SPY on Friday. We skyrocketed through that. We closed quite strong. Don't be naive. Don't be smart and follow my recommendations. Please do your own analysis also. Just check what I just explained, but this is pretty clear. Market it's quite bullish right now. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos like this weekly recap every week on Saturdays for you to be prepared for next week and also review what happened this week. During all the weekends, I prepare my charts, I prepare my analysis. Basically, I do these kind of recaps and it's really journaling and trying to improve my trading. This is what you have to do in order to be successful. And also remember that discipline and risk management are key for your success. Congratulations, bulls this week, but be prepared because I think there's more to come. Stay safe, everyone. Have a nice weekend and see you on Monday.